We talk about this all the time. When we see an iceberg come in and he chases, generally there could be a little pop after he gets filled. And if you look at this first red line, then he lowers it down to here at 93.75. Then he lowers it again. And once it gets filled, you got to be careful of staying bearish. Generally, you get a move up. Now we get the move up. It's not coincidence when you're following this type of flow. Gets above this aggressive purple rectangle as well, or pinkish rectangle as well. And then you want to see it get white above and white below to have some sort of continuation. So it's like, well, what could we see for this before this happens? It's easy to say it's strong after it rallies 7 points, but what could get us on the right side? First thing was these iceberg sell orders chasing it and kind of releasing the pressure once it gets above it. But then the laser, we want to go from green to red if we think there's going to be some continuation. Want that transfer. And so when we play it, want to kind of get it at or right there. It shrinks to from green to small green to red and goes significantly red, minus 70 quickly. And it's because of all these shorts that come in. So it's not a coincidence that it does that afterwards. All right. That's information that's important because we get it before it happens. It's predictable. And that's important. Now, if we fast forward to another, like, where can we find a sign of a bottom? Because days like today that are very weak and directional, the problem people have is picking too many bottoms. So you want to get good at when you do it, you have a better chance of having it go your way ASAP. So you're not fighting instead of fading. And so we had another similar, at least temporary bottoms. You're not going to try to pick the bottom and the low of the day. That's crazy. Or even the high of the day. But another example of what could be a temporary bottom, and it rallied 12 points from here, was again the laser going green to red. But all of these shorts that are piling in, and on top of that, this pink box of 116 aggressive sell orders that come in, aggressive sell market order, and we quickly get above it. Let me rewind it to that moment. So he comes in, let me play it. You'll see 116 lot market order, sell order. So that's like, we get above it pretty quick, and then we go, the laser goes green to red. We get all white with eager buyers, anxious buyers, very patient sellers above. So it's no coincidence that you expect some upside follow through. So when you get it, it doesn't seem random. It's predictable. If it's predictable, it's tradable. If it's not predictable, then you're going to be reaching, you're going to be late. It's one thing to be bullish down in here. It's another thing to be bullish up here. Big difference. Make the difference between a winning trade and a losing trade. Because now you need, if you buy it up here, you need a whole nother example of aggressive buyers and people who are stuck short and all that stuff in here in order to get the next pop. You might get it, but you need more. It's important to be long before others try to get long. To be long right before shorts start to panic and have to cover those shorts. Sure, you get some more upside follow through, but it's important to just go back and read these lasers because they're forward thinking. They have everything to do with the market as it's got people stuck, which is why price moves in the first place. Other people's positions. You're either in our group or on our damn charts.